everyone, welcome back to Mindful Investing. Today I'll be sharing 5 stocks that I believe are undervalued based on my earnings based discounted cash flow model. These are names that still show strong potential despite how much some of these names have already run this year. Now, just to be clear, the prices and valuation I'll discuss today are for the long term, not short term trades. Some of these stocks have seen significant moves recently, so it's always wise to wait for key technical entry levels before adding them. But fundamentally, in my opinion, each of these still has plenty of room to grow over the next few years. So let's start with the first one, which is Micron Technology, ticker symbol MU. Micron stock has had an incredible run this year. It's up about 158% year to date. And now, despite that big move, the company's fundamentals remain solid. Micron has a very strong balance sheet. They hold $9.6 billion in total cash, $10.8 billion in cash equivalents, and about $16.1 billion in total debt. That leaves them with a net cash position of roughly $4.3 billion, which gives them a lot of flexibility for future investments and R&D. Their free cash flow sits at around $1.66 billion, which means their debt to free cash flow ratio is about negative 2.59. That's excellent and shows real financial strength. Now, according to my model, in the bull case, I'm using an annual EPS growth rate of 28.5%, which implies around 250% upside in 5 years. In the base case, I see about 137% upside, and in the bear case, roughly 54% upside potential. To validate that, I also ran it through a couple of intrinsic value calculators. The Peter Lynch fair value calculator estimates a fair value of around $216, which is slightly below the current price. Meanwhile, the earnings-based DCF model shows Micron is undervalued by roughly 35%. Now, I'm not going too deep into the business model, revenue drivers, or my detailed thesis behind the bull, base, and bear case scenarios in this video. The goal here is to keep things concise and give you a high-level view of where these stocks stand from a valuation perspective. I'll be doing separate in-depth videos for each of these companies later, where we'll dive into their growth catalyst, financial structure, and my full conviction thesis. Otherwise, this video will become way too long and not everyone may be interested in going deep into every stock as part of this overview. So for now, let's keep moving. And by the way, I do hold Micron shares myself and my average cost is around $120 and I'm currently up about 81% on my position. That said, from a technical perspective, the stock looks quite overbought at the moment. RSI is elevated both on the daily and weekly charts, and price has pulled far ahead of its 20-day EMA. So even though valuation wise it's attractive, I personally prefer to see a short-term technical pullback before adding more. Overall, Micron remains one of the most promising semiconductor names, and I'll definitely be looking to increase my position at better entry points. Alright, now moving on to the second stock on my undervalued list is NU Holdings, ticker symbol NU. NU is up about 53% year to date, and I personally hold a position in this stock which is currently up around 31%. From a fundamental standpoint, NU's balance sheet looks exceptionally strong. They have generated about $3.65 billion in free cash flow, hold $17.15 billion in cash equivalents, and maintain a total cash position of $12.3 billion. When you offset that against their debt, it brings their net debt to a remarkable negative $28.9 billion, meaning they have a huge cash cushion to support future growth and expansion. Now, coming to my valuation model, in the bull case, I project roughly 340% upside in the next 5 years. The base case shows around 188% upside, and even in the bear case, there's potential for about 79% upside. To cross-check those numbers, I ran 2 more valuation models. The Peter Lynch fair value calculator gives a fair value of $16.20, which is about a 2% upside from today's price of $15.80. And the earnings-based DCF model suggests a fair value near $23, implying around 45% upside from current levels. That's a pretty compelling range of estimates, and if those growth assumptions play out, NU still has a lot of room to run. From a technical perspective, I believe the stock is still fairly priced at these levels. It hasn't reached overbought territory yet, and in my view, NU remains a solid buy even right now for long-term investors. The third stock on my undervalued list is Lululemon, ticker symbol LULU. Now, this once had a rough year. The stock is down nearly 53% year to date, which has definitely shaken a lot of confidence around the name. I do hold a small position in Lulu myself, currently down about 13.5%. And to be honest, I view this more as a short term swing opportunity rather than a long term investment right now. From a balance sheet perspective, Lululemon is still in decent shape. They have got about $1.16 billion in free cash flow, and their net cash position stands at roughly $575 million. So liquidity isn't an issue. However, growth has slowed and the market's waiting to see whether new apparel lines or innovation can help the company regain momentum. If they can deliver some fresh styles and reignite sales, I think we could see the stock make its way back above $250 in the short term. Now, according to my model, the long term upside looks limited at this stage, not something I'd hold for multiple years. But based on my earnings based DCF, there's still a 7% short term upside, which points to a fair value of around $190. That's roughly a $12 upside from today's price near $178. So, for active traders looking for a quick move, Lululemon might still offer a short term setup worth considering. The fourth stock on my undervalued list is Shift4 Payments, ticker symbol FOUR. This stock is down about 27% year to date, but the fundamentals tells a different story. Shift4 has a strong balance sheet with about $304 million in free cash flow and a net cash position of roughly $2.4 billion. That's a very healthy financial cushion. Based on my valuation model, the potential upside looks attractive. 174% in the bull case, 93% in the base case, and 31% even in the bear case scenario. From a technical perspective, the setup also looks interesting right now. On the weekly chart, the stock is sitting right on its 200-day EMA, a level that has historically acted as strong support where prices tend to bounce back. However, on the daily chart, the stock is still trading below all its major EMAs, which actually makes it look like a bargain at current levels for long-term investors who can handle short-term volatility. And based on my earnings-based DCF, I'm seeing an additional 8.5% upside from here, which further supports the case for accumulation at these levels. So overall, Shift4 looks like a technically oversold but fundamentally strong opportunity, a stock that could surprise to the upside once market sentiment returns. And the fifth stock on my list is Alibaba, ticker symbol BABA. Alibaba is up over 100% year to date, but the story isn't over yet. This stock was once trading around $300 back in 2019 before falling all the way down to about $60, and now it's showing real signs of recovery. From a fundamental standpoint, Alibaba's financial strength is remarkable. The company generates around $64.5 billion in free cash flow, and according to Yahoo Finance data, it holds a net cash position of nearly $410 billion, an incredible number mostly due to its large holdings in cash equivalents and short-term investments. That's one of the strongest balance sheets in the market right now. According to my earnings-based DCF, Alibaba's fair value sits around 175.8, which is roughly in line with its current price. And my own valuation model shows a potential 82% upside over the next 5 years in a bull case scenario. Technically, the stock doesn't look overbought to me yet, which means there could still be plenty of room for this rally to continue. So those are my 5 stocks currently undervalued based on earnings-based DCF model. Let me know what you think about these picks in the comments below, and don't forget to like, subscribe, and share if you found this breakdown helpful. It really helps the channel and keeps the research going. Thanks for watching, and I'll see you in the next one.